To the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 5:06 p.m. That is Central Time, and today is September 12th. And today, being Friday, it's the big picture, long-term audio and video for the various different asset classes. Well, I think the big question for everyone really is, where are interest rates going? It's a big question for a simple reason, that we've had a secular bull market in bonds that lasted for about 40 years. And we reached levels of yield in 2020 that were previously unimaginable. And just think about that at the end of 2018, the yield was testing 3%. And by the time we got to March of 2020, it was at a half of 1%. So that's an incredible acceleration. And since then, we saw that the yield went up by almost 10 times to 5%. Now, we're at a point today where there's a big question about the sustainability of government finances. This is not just a US question, it's a European question. It's also something that is plaguing the minds of people in Canada and Australia. And obviously, the jump in yields not only has happened in one country, but there has been incredible commonality right around the world, which very clearly helps to I think, ram home the point that debt problems are not going away and they are global in nature. And then we also have to be, I think, aware that the jump in yields between 2020 and 23 was a large part due to runaway inflation. And then the refusal of yields to drop since then has been about the persistence of that inflation into an environment where we have a little bit of evidence that the economy is slowing down. And now there is the broad question whether the Federal Reserve, having aggressively raised interest rates into that inflationary problem, has now kept those interest rates too high for too long. And that brings us back to that big question, which is, are yields going to break downwards or are yields going to break upwards? And to say that this is a big question, I think very clearly is emphasized in just how differing the opinions are. Because I've seen some very well established analysts and traders betting that yields are going to cruise north of here through 5%. Whereas I also, and I am of the opinion that it is quite likely we're going to see a deflationary shock at some stage. And then that would compress some of the yields. But then that is where a market comes from, where a range means that supply and demand have come back into relative equilibrium. And we have certainly had a range over the last 3 years. But let's think about, well, are we